What up? It's your boy Kim back again. Nadi here presenting Mr. Kimani Capital. And today is a good day, a Thursday. You know, we can see how the market structure is on a 1 hour time frame. And as always, let's go all the way up so that we can do that top down analysis. We always want to zoom out so that we get to see the market structure based on a higher time frame and now scale down to get better understanding of the short-term market structure to be able to get entries and possibly make a profit. So you can see on a weekly standpoint, we have had a very nice, despite having all this bearish momentum, all all these dodges right here, we have had a very nice bullish week. Of course, this has been catapulted, all right, has been enforced by the expiration of the futures contracts, and we have more bullish futures contracts, meaning more call options than put options, which means that of course price gonna go up to close at least above 41K, which was the maximum uh, you know uh, profit. We get maximum profits for call options, which means that those who have put options will make a loss, um, which is okay, right? But we've just broken structure. We've broken this trend line upwards, which means uh, yeah, before opening of tomorrow, we should still hold on here or even fast way up, and we'll be able to break this previous high. Now we'll have formed a higher high and probably will be headed up. If not, I mean, it's still gonna go down because there's still a lot of bearish momentum. We are still stuck in this range, right? We're still stuck in this range, and 45K is a very key resistance zone. So watching for that very much closely, very closely. Okay, we have still not broken market structure yet. Still very bullish short term. Okay, and yeah, I mean a lot of manipulations going on. You can see here with this candlestick. This is definitely a reversal candlestick, but despite having it, especially on the 4 hour time frame, we still kept going up, and you can see another candlestick right there. These are liquidations that were happening. Why? Just to make sure that a lot of just to make sure whales get liquidity to move cash, take profits, and buy the dip. So like this dip here, of course, was like, you know what, um, I know we have to go up, and let's take our buys right here so that we can get some nice profits even when the futures contracts are expiring. Okay, so yeah, I think that's pretty much it. There's nothing much going on. The Fed have increased the interest rate by 0.25%, which means that now they have started what we call tapering, what we call quantitative easing. Now, before they were doing what we call money printing, okay, which is giving liquidity, is providing liquidity to the market, which means now at that time markets are booming, everything is enough money to buy uh, speculative assets, and that makes the market boom, right? But then when the Fed starts quantitative easing, tapering, which is now removing liquidity out of the market, there's no more stimulus checks, there's no more money being printed. Now, what happens is now investors have uh, less incentives, okay? Investors have less incentives to borrow money to invest. So what happens? They now start deleveraging, they start de-risking, and de-risking is basically now hedging their portfolios against risky assets like crypto, stocks, and now they want to cash out and have safer investments like gold, commodities, and that makes the market crash, and that's why we are seeing a lot of economists saying that we're about to face a recession. I don't know if it's true, but if it happens, well and good. I mean, it will be an opportunity crashes during recession. So I'll be very cautious, waiting to see what really happens here. But to be honest, anytime interest rates hike, that doesn't really affect the market in a negative way. But tapering, quantitative easing, it really does. It really does. It really does. We're gonna see a lot of massive sell-offs. Hopefully, hopefully not. But yo, if it happens, at least we'll be ready. We will be ready. We will be ready. And yeah, be ready to buy the dip. What's good, guys? Thank you so much for listening to me. I mean, it's been a minute. You make sure you also comment below. Let me know what you think about how the interest rates hike is gonna affect the market, and also the quantitative easing issue. Talk to me. Let's have a conversation in the comment section below. Let me know what else you also want to hear from me, guys. Cheers, guys.